Most of us get into real estate investing looking to build generational wealth and passive income. Well, today I speak to Mr. Passive. That's right. I talked to Mike Hoffmann, who shares how he has invested passively in not just real estate, but Bitcoin mining, as well as vending machines. He shares some of his strategies, his insights, and his approach to being a passive investor and why he focuses on investments where he can be passive in the first 30, 60, or 90 days. If you want to have your money work for you and not the other way around, make sure you check out today's show right here on Multifamily Insights.
When you think you found a great deal, asking the right questions could be the difference in finding a stud or a dud. Listen, we've put together a new guide to help you out. It's called 7 Questions You Must Ask Before Investing in Apartments. Now, in this guide, you're going to learn how to uncover red flags, quickly identify underwriting risk, vet sponsors and team members, and confirm key assumptions. Now, this is a guide that's going to help you be a better investor, whether you're an active investor or you're a passive investor looking to partner with other operators. Asking better questions is the key to identifying great opportunities. So download this free guide, go to our website, casmoncapital.com/7 questions. That's the number 7 questions. And you can access this free guide today. To make it easy on you though, we've put a link in our show notes. So you go to the show notes, you can click that link and access the guide right now. This guide's going to help you make better investment choices, asking the right questions to build your portfolio. So be sure to download it today.
Now, Mike Hoffmann started his passive income journey from the humblest of roots. At the time, he was working a 60-hour per week job that paid him only $1,200 a month. He used his emergency funds to invest 20% down on a $70,000 fixer-upper. After 2 years, he sold that property and rolled the capital gains into a $250,000 condo in the Pacific Northwest Mountains, and that allowed him to begin his passive income journey. Let's welcome to the show, Mike Hoffmann.
John, thanks for having me. Fired up to be here.
Yeah, absolutely, man. Great to talk to you and excited to have you on the show today. I started sharing a little bit about your background on your passive income journey, but why don't you take 2 minutes to fill in some of those gaps?
Yeah, so for me, started in rural Iowa, very small town, just kind of, it's funny, I had a lemonade stand growing up and then I worked at McDonald's as a teenager. So like 2 of the kind of the most successive like entrepreneur examples, as Warren Buffett would say, and I didn't even know it at the time, just trying to make ends meet. But yeah, I got in real estate with like the lowest capital I could, which was a $70,000 fixer upper, like you said. And then I just kept parlaying it from there, using 1031s and just trying to take advantage of where the markets were going and use that to get into Airbnbs. And then during COVID, a lot of people were going to Florida to work remote. And so took the Northwest condo and got a big pool house in the Clearwater area that just kind of tripled in value. So just kind of followed where the market was going and just tried to be a little smart about it, but also, leverage good debt.
No, I love it. You mentioned you start off really as an entrepreneur as a kid, right? So lemonade stand, working at McDonald's, that first investment, $70,000 fixer-upper, took the profits there, continued to roll it over. What got you into real estate? What made you decide real estate is where you wanted to be on that first investment?
Yeah, I think for me, when I was coaching in collegiate athletics, when you start out, you're not making much. In fact, my first gig was an internship for basically as free labor. But when I got my first paid job, I was literally making $1,200 a month. That was my take home pay. And I was working minimum 60 hours a week when we were in season with football, 80 to 90 hours a week. And I just knew like I need to be kind of earning with my mind, not my time. And I was really trading kind of time for money. And it was way below minimum wage if we actually broke it out to an hourly amount. So I had met a friend that was like, hey, I'm making like $200 to $300 on these $70,000 fixer uppers in the Midwest. And it's just side cash flow. I'd pay someone 6% at the time to manage it for me and put out fires that come up. And so that's when I did a little investigating. I was like, I need to put this emergency fund to work.
Yeah. So you mentioned you kind of had a conversation with somebody else who was doing this. So in that first deal, was that kind of like a turnkey investment, or did you handle the rehab yourself? Like, how did that work?
Yeah, it was more turnkey. I'm a huge like try to make things as passive as possible and delegate as much as possible or automate as much as possible, whichever one. So yeah, that was definitely. I was glad to hire someone to take on some of those um, insights for me.
I think that's really great, right? Because, I think a lot of times people assume that, hey, you got to start active. You got to get your hands dirty. You got to roll up your sleeves. You got to build a little bit of equity. And then once you got, $100,000 or $250,000, whatever it is, then you can start to invest passively. You took a very different approach, right? You took whatever you did have and you used that to invest in this smaller property to generate some income. And then you took those proceeds and started to scale from there. Can you talk a little bit about just why it was important for you to start investing and start investing passively, considering you didn't have a huge, amount for a down payment?
Yeah, I think at the end of the day, for me, it's I'm always kind of thinking like two steps ahead of. At the end of the day, I want my money to work in for me, and if it's not working for me, what's it doing? And so that's where I knew that I needed to do something. And that was like until obviously I got into vending machines and micro markets down the road with my story. But I needed to find something, and that real estate just made sense to me. It was very brick and mortar. People need somewhere to live. It just, yeah, it was simple. And for me, I love to pay for expertise if it's going to help me get from A to Z that much quicker.
And you're also pretty busy, right? I mean, I imagine
Oh
when I
yeah,
was at the college coach, you didn't have a whole lot of time to be traveling to, the property and picking up a hammer and trying to do a lot of that work yourself, huh?
exactly. Yeah, there was no. I didn't want to be the first call when the toilet broke. That's for sure.
And I think that's great too, because a lot of times, I talk to folks who've maybe been burned out on real estate. It's because they didn't think through that aspect, right? They heard you can make money in real estate. There's some properties that are affordable. They go out, they buy these properties, but they don't really think through the management. They don't think through who's going to take that call, who's going to go out to the property, who's going to manage these issues when they arise. And it turns them off when they realize, oh, I guess I got to do it. In your case, you recognize that out of the gate. So you truly did focus on the passive investing side so you can make money while you're focused on other activities. I know we talked about you kind of, 1031 exchanging that property and being able to scale. Talk to us more about kind of your investing philosophy.
Yeah. So my investment philosophy is all about just understanding trends. Like, what are people and what are the trends that are kind of happening in the marketplace? For me, I just have always kind of been aware and always reading on what's next. Like now with AI and stuff, there's so many trends around that. And even on the real estate side, I think it's super fascinating. Just seeing kind of the trends of oh, people went remote during COVID. Now people are trying to bring people back into the office, but there's still a lot of jobs out there that, they're not bringing them back into the office. So to me, at the end of the day, it's all about just seeing where the trends are and maybe where the gaps are in the market. Like I'm really intrigued right now. And I have none of my portfolio is in like industrial real estate, but like I have a friend that's got into industrial real estate, like just seeing trends of, um, at the end of the day, people and the pressure of tariffs and stuff are making people kind of bring things back to the US. And so there's going to be manufacturing, industrial demand. I come back to listening to some of your stuff, John, and I just bought a plot of land and built a house and an ADU and fenced them separately. And now I think there's some really interesting and creative multifamily components that are really catching my eye. In fact, we're just went under contract for a plot of land that's right outside of city limits. We're going to annex it into the city, and then we're going to build four duplexes, and we're going to build them and permit them in a way where they're technically 8 townhomes, so we can sell them off. We can, we just have a lot of flexibility. And that's what I love when I look at investments is how much flexibility do you have if kind of things don't go the way they were planned.
Yeah, you talked about understanding the trends, right? So your investing philosophy is really stepping back. What are the trends? What's happening? Where are things going? You talked a little about, industrial. You talked about multifamily and some of the changing landscape there. And also you're looking at land development deals, right? And understanding where there might be opportunities. Where are you located right now?
I'm in Oregon.
All right. So you're in Oregon. You mentioned just like a couple words that may be new to folks. So you talk about ADUs, annexing the land and being able to convert them into townhomes. For those folks who you may have went right over their head, can you just take a moment
Yeah.
to kind of clarify what that means?
Yeah. So, and kind of how that I got into ADUs is when I first got my first rental, the $70,000 rental, all I knew, literally the only thing I knew was the 1% rule. And people might not know the 1%. Like I didn't know cap rates. I didn't know anything. So when I got this $70,000 home, the mentor that kind of coached me on this is like, hey, you just want to get to 1%. I was like, oh, what's that? And he's like, if you buy a house for 70 grand, you want to rent it for $700 or more, and you'll most likely be profitable no matter what the interest rates are on your mortgage, what escrow, and all the repairs. Like you'll probably be profitable. So I knew, like, okay, so that first house, $70,000, I was able to rent it for $900. So I was above the 1% rule. Well, what's interesting, John, when I moved to the West Coast, I realized real quickly there is no way you're going to get 1%. A great example of this is we had the rental I lived in Palo Alto, California, arguably the most expensive place in the US. We lived in a house that was 5 bedroom. We had to house hack it. It was $5,000 for rent. Keep in mind, I was renting. I couldn't afford the house. Well, that house was worth over $2 million. So if you think of the 1% rule, that person that had a $2 million house, to make the numbers make sense, needed to rent that for $20,000 a month. Well, we were renting it for $5,000. So there was no way that owner was getting 1%. So what I did when we moved to Oregon from the Bay was like, oh, this is really interesting. I actually bought a plot of land and I was like, okay, I could build a house, but I actually built an ADU behind the house on paper with the city. I fenced them off separately, separate entrances, the whole thing. If you pulled up to that lot of land, you would have thought it was two different houses. You would have had no idea it was on paper an ADU. Well, ADU is just a fancy word for an in-law suite. It's like the 2 bedroom pool house where someone throws grandma when she gets old and that kind of whole thing. So for me, I was able to rent the house and the ADU. So I was getting double the income to make it get to that 1% rule that I was able to get to so easily in the Midwest. But on the West Coast, because housing prices are so high and people love to live out here, you almost had to like backdoor it by adding an additional unit, in this case, an ADU, to get to that 1% with the two rents for the same plot of land.
Yeah, and I just love it, right? Because the one thing that you can always do is find ways to be creative, right? Part of being an entrepreneur is figuring out, well, where do I create value? And sometimes it's not clear, right? The numbers don't add up. Like you mentioned, that $2 million property. Well, you're not going to get $20,000 in rent, right? However, if you can look at that plot of land and add an ADU, now maybe you can get closer to that. And that's something we're seeing that's becoming more and more popular, particularly in the West Coast, right? California, Oregon, some of those high-grade places to live. But even in some of the more, dense markets like Chicago, where we used to have a big issue with that, and they started to loosen up some of those laws, and whether you call it an in-law suite or granny suite or whatever it is, you're starting to see a little bit more of that come into play where they're recognizing, okay, we need to allow people to make more housing. So we're going to have to loosen some of the laws and regulations on what can be developed on this land. Let's go back to this moniker, right? I mean, you talked about passive investing. I know we're talking about maybe more active stuff here, but how did you land on that, Mr. Passive? I mean, how did you earn that nickname, and how did you land on that moniker?
Um, Honestly, I'm just a huge believer in um, where should you be spending your time, and what is time worth to you? So you talk about like the fixer upper. is your time spent doing the $20 an hour, like tear down the old drywall, or is your time spent on other things that might be $50 to $100 an hour type tasks? And so I always come back to buying back your time. And so I would always just think through that, no matter what my investments were. I knew there would probably be a little bit of an active component to start, but my goal with any investment is by day 30, 60, or 90, I want to be completely passive. Sure, like I'll do a 30-minute review on the financials a month or a week, if depending on how intensive it is, but like I don't want to be the first call for any of my investments.
No, I love it. It's a great strategy, right? By day 30, 60, or 90, you want to be passive. That's a great lens. Just to recognize, hey, your time is better spent doing other things, more high value things, as opposed to, I learned the hard way, swinging hammers is not really my forte in the first place, and it didn't make me any money. So trying to save money is one thing, but investing your money and putting your money to work for you is a completely different strategy. So I love when you talk about that. We've talked a little about real estate, but you're invested in a few other things as well. Talk about some of the other asset classes that you've invested in.
Yeah, so I have technically a lot of e-commerce stores I got into before COVID, kind of when it became like a fad. So I have some stores there. I do some Bitcoin mining. I literally I just check my wallet every month and look at the hash rate and all that stuff. So it's I pay almost like a management fee to someone else to do that. And then I've been really interested. I got a vending machine location back pre-COVID, and the profits of that machine were actually more than like my first rental. So, and like it just seems so scalable because you don't have to put like 20% down. Like you can just finance a machine, which I didn't know anything about this. And I was like, oh my gosh, this is fascinating. Like if you use apples to apples as it relates to real estate. So I've doubled down on that, and now we have over 100 locations. Just hit 100 grand a month last month. So it's just been it's like mailbox money. It's just so simple. And, it's kind of like what Warren Buffett says, like KISS, it's just like, at the end of the day, people are going to need food and water. And, that's kind of, to me, it's like the 21st century lemonade stand.
I love it. So with the vending machines, are you actively running that? I know we talked about how do you get past the 30, 60 days, but it feels like somebody's got to go fill those machines, right?
Exactly. Yep. So for me, we have general managers. I have a couple routes across the country. General managers over those routes will do 30-minute check-ins for each route a week. So I spend 30 minutes per route a week on those, where they're just reporting kind of their financial metrics, if they need any hiring help or anything that I can do, just to be a sounding board. But yeah, for me, when I made my first kind of landed my first location, I instantly went into, okay, how do I make this passive? Like hire an operator. Like the great thing with vending machines that's so interesting, John, is it's the gig economy. And so you think of like Tim Ferriss and the 4-hour work week and all these gig Uber drivers, DoorDash drivers, all these kind of, it was so easy to post an ad, for example, on Craigslist. They have Craigslist, you have to filter through the good and the bad, but they have a gigs job section. And so we have a job template where we'll post and we'll say, hey, John, we don't care. Let's say we're hiring you for $20 an hour. We don't care if you stock in the morning, at night. It just needs to be stocked on Tuesday, Thursday. You do it on your time. And we've had no issues scaling up staff that way.
I love it, man. So how did you get started in that space, right? I've read stuff, I've listened to podcasts, and it always felt like me running around. And maybe I've been thinking too small, right? It's like, oh, we'll go out and buy a vending machine. It's like, sounds like you took a little bit of a different approach.
Oh yeah, you're thinking too small. I'll tell you that right now, because I will say you do need to stock the first machine. So, and you do need to install a machine because you can't delegate anything if you've never done it before. And so unless you just have a bunch of YouTube videos, you send your new hire, which that's another way of doing it. Absolutely. But I'm always kind of, it's the understanding trends, right? Like we talk about real estate trends. Also understanding trends and where things are going. So I saw just through my previous job living in Silicon Valley, I traveled a lot. I was in airports and I was in hotels a lot. And I would go to let's say a Courtyard Marriott or some type of hotel, and they had the little grab and go markets. Well, you go grab a late night ice cream or Celsius in the morning to start your day from the grab and go. Well, the first thing you have to do is you have to go wait in line at the front desk to tell the front desk lady, hey, throw this on the room charge, or hey, I'm going to pay for it with a credit card. And I would wait there while people are checking in. I literally just want my Celsius to start the day. Like, why do I have to do that? So I thought, like, why wouldn't you just throw a checkout kiosk in the grab and go? And then you just remove all that friction. Just like old school vending machine, you have to enter in a code after you put your card on the card reader, if the machine even takes a credit card. So you have to enter in cash, push C4 to get your Celsius to spiral down the motor and shoot down. But then let's say you want to get a protein bar too, then you have to do the same process and press D9. So I was like, wait, what? Well, nowadays with unattended retail, a perfect example of this is you come into the Vegas airport and you're coming down the escalator and the huge Vegas sign says, welcome to Las Vegas, home of whatever McCarran International Airport. Well, when you get to the bottom of that escalator, there is a 7-Eleven at the bottom of that escalator now. It has 0 employees. So you literally, to get in, there's gates to enter and gates to exit. You put your card on the gate for it to open. And then there's AI cameras all across the ceiling of this store. And they track you based on what you grab. They know what you put back. Like it's there today. You go to Vegas, you're going to notice this now. When you go to the exit gate, you will get a notification to your phone that's like, you got 10 items, please confirm, check out. You don't even talk to a human. The gate opens and you're on your way. And I just come back to like, you go to the Hudson bookstores in an airport. If you have to pick between waiting in line to talk to a checkout lady or just going over to the self checkout to do the transaction, where are you going to go? You're going to go to the self checkout because you don't want to wait in line, and you don't want to talk to a lot of times the grumpy old lady that hates her job and is going to be negative and be like, do you want a bag for that? Blah, 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 or whatever they say. And so just understanding trends, like the future of vending is these unattended retail. Nowadays, there's smart machines. You're just opening up the door with a credit card, and then whatever you grab, the cameras in the machine will track to that credit card that was used to unlock the door. So we have a lot of these smart machines where we'll do shampoo. I mean, we're installing 4 machines, our team here in Oregon today at urgent cares, and we're going to do, it's allergy season. So we're doing a lot of like allergy over the counter things. It's not just like your Snickers and Diet Coke that you think of from the 1970s.
Yeah, I love it. It's funny because we just went for spring break. We were traveling, and I had a layover at the DC airport and experienced that firsthand. And I was looking at the lady, and she's like, "You just swipe your credit card to go in, and then that's it." And I was like, well, how do you know what I bought? And she did this. She did the same thing you did. She just did this. And I'm like, oh, there's a bunch of cameras. Okay. And there's a joke here that someone told me this is like an SNL skit, but as a black man is walking in, grabbing stuff and walking out, I was like, I don't know about this later. So I ended up not buying anything, but that's where technology is going, right? And it's really interesting to see how it is evolving. And it's one of the things that I think, and I'm pretty progressive from that standpoint, but it's just like, I can imagine someone who's not new to technology, and it can really throw you off. Like, wait a minute, there's no one to talk to or no one to check out. But to your point, that's going to be coming more and more, and across the country.
Yeah, and the technology is here. There's no like, this is where it's going. And
Yeah,
I'll give a great example of this. I went to the unattended retail conference last year in Dallas, and I walked into they had one of these stores you were talking about as an exhibit. And I was like, okay, I'm going to try to game this thing because it was just a vendor show. Well, I walk in, I grab a Diet Coke, and then I tried to grab the smallest item you could grab, which I think was like either a little Hershey's thing, like the little like boxes of stuff they try to get you right at the checkout of like, oh yeah, throw this candy on there real quick, like impulse buy. So I grabbed like a little Hershey's thing, and then I grabbed a little like 4-pack of Tums. And I walked around because the AI cameras are tracking you, but they also have sensors on every shelf that are tracking the items that were pulled to the person that it's tracking to. And then right before I got to the checkout on the other side of this gate, I literally threw those 2 items in a completely different part of the store. So I didn't go put them back or go like the Tums back I literally threw the Tums in like in between. I think I opened a cooler and threw them in between the Cokes. And no kidding, when I went to the checkout gate, the only things I had with me were the things I was being charged for.
wow, that's incredible to see how that technology has evolved. I remember in that instance, I had a water bottle that I went in with, and I wanted to make sure that it didn't charge me for the water bottle, which is the real reason that I was like, yeah, you know what, this is too much. I feel like I need to tell somebody like, no, this is my water bottle. Don't charge me for it.
Yeah, yeah.
But
Yeah.
again, it's crazy to see how far technology has come along. And if you're, like you said, this is not the Jetsons, this thing in the future, 5, 10 years from now. This is happening right now. Going back to the vending machine thing, right? I think this is very interesting. We have a lot of listeners who are passive investors in real estate deals. Being able to invest in something with some scale seems more appealing. I imagine many people would have interest if they can invest at a level where it can be passive the way you do it. How does one get started in something like that?
Yeah. So this is one thing they could, if they want to like really kind of go down this rabbit hole and talk to us, they could go to our website. I know you'll put it in the notes, but like vendingpreneurs.com, we do have a lot of like passive investors because I do think a prime opportunity right now in the marketplace. And I actually had a big PE group reach out to me last week, and we were chatting on Monday. But and if this has PE's eyes, there's something here. But I view this actually very similar to the $70,000 house, and that vending routes today are just like flipping a house. So when you buy a vending route, there's a route. I just got a notification. I think it's in Denver, Colorado today. That's going for sale. And it's got, here's your financials. Here's what each location is doing. Here's how many machines, blah, blah, blah. Well, John, all you're buying with that route is the locations in my mind, because guess what? Just like flipping a house, when you get that route bought, you're going to go in there, pull out these old school machines with the C4 motor that spits out a Snickers, and you're literally going to replace this with a grab and go market where through the 12-ounce can machine, now I'm going to do a 20-ounce Diet Coke and I'm going to be able to charge way more. Well, I just bought that route on the 12-ounce can revenue when I can actually change it to 20-ounce can or 20-ounce bottle revenue. So that's where, like, to me, it's like flipping a house. You can quickly do value add. I mean, these urgent care machines, you think about it, we're going in there and we're not just putting sodas and candy. Like we're literally putting because it's just shelf space with the AI cameras that will track like, oh, this is Mucinex. So if someone grabs the Mucinex and walks away, it's going to charge $20 to the card used to unlock that door. So now I would need 15 Diet Cokes, 12-ounce cans to get to $20. Now, one little box of Mucinex when they walk away at like the transaction values, the revenue, the margins, everything just, we did it actually with one of our locations. We swapped out an old school machine that was doing $1,200 a month with a new smart machine, and our revenue went to $2,500. Same exact location, purely off of reducing the friction of doing higher priced items with less transaction friction, like entering in the codes.
I love it, man. Great information. And you're right. Let's like make sure everybody knows that website, right? vendingpreneurs.com. We'll link to that in the show notes. And you're pretty active on YouTube as well. So if you want to learn more from Mike and his team, check out his YouTube channel. You can go to Mr. Passive _ on YouTube. We'll link that in the show notes as well. Right now, we're going to make a transition and go to our round of insights.
They say you're the average of the 5 people you spend the most time with. So if you want to grow as a multifamily investor, you have to spend more time with other multifamily investors. And an easy way to do that is to join our apartment investing mastermind group today. Just go to casmoncapital.com and click on the mastermind button. Now, as a part of this group, you'll get access to expert trainings, group coaching calls, industry news and updates, as well as all of our webinars and workshops, including our 3-hour workshop on raising capital. Again, if you want to be around other multifamily investors that can help you scale your portfolio today and grow your network, make sure you're a part of the Apartment Investing Mastermind. Just go to casmoncapital.com and click on the Mastermind button today.
Mike, give me a failure or an apparent failure that sets you up for later success.
That's a good question. There's been a lot of them. I think, what kind of got me into real estate was the whole, my W-2 really kind of chased me to want freedom and that whole grind with college athletics. But the other thing is too, is I was going through a breakup in the Midwest, and that's what sparked me to just hop in my car and move to Palo Alto. And that kind of situation has led me into this entrepreneur DNA of you're just trying to survive when you're living in the most expensive place in the US. So I don't think, it was a failure, but just looking back on that hindsight, getting uncomfortable is what leads to action. And that's kind of what led me into these different things. I still remember, the reason I got into vending, I was in the Denver airport at 11 p.m. The flight got delayed, and they were like, yeah, you're going to have to stay the night in the airport because now the pilot can't fly because he's already over his hours for the day. And so I went to this vending machine because I'm literally sleeping in an airport. I paid $3 for a bottle of water out of this vending machine that I knew that water cost 20 cents at Costco. And I knew the guy making that much margin off of me was at home sleeping. And I was like, this is backwards. What am I doing? Chasing sales quotas. And sure, I had every premier status on every airline, but that's not fulfillment.
I love it, man. I appreciate you sharing that. Give me a digital or mobile resource you recommend for our listeners.
Oh man. Digital or mobile resource. I love YouTube, only because I'm a huge curiosity guy. And so I love going down rabbit holes, and there's a lot of free information that people give, and people want to help you. Look at you, look at the content you put out. You get a lot of people that come at you in your content, and you get a lot of grenades thrown at you for some of the content. And that's where for me it's yeah, but John does that because he truly wants to help people at scale. And that's building a social media brand is not easy. And I don't tell people to go to YouTube because I want more followers. I just there's a lot of free content on YouTube, whether that's how to fit a vending machine through a door, or how to evaluate a multifamily property, or, even this annexation thing with the city. I don't know what I don't know, but YouTube is a great asset.
Yeah. I love it. YouTube is certainly a great place to learn some ideas and concepts. So I love it. Give me the book you've recommended or gifted the most in the last year.
I love this question. This is a really good question. So I love, if you're in business or even for your personal finances, I love the book Profit First. I think that's just a great idea, even if your company or your portfolio is not profitable. I just think it's a great idea. The whole concept, even my wife and I with our personal finances. But the other one that I'm super bullish on, just because I love to make things passive, is Buy Back Your Time.
Love it. Two really good options there.
And Buy Back Your Time, it flips your mindset. People aren't trying to sell you something. People are trying to do you want to do it and have 5 failures and it take twice as long? And I come back to the flipping the house thing. I don't want to be doing the drywall, screwing it up, running into, you take off the drywall. Well, what do you find behind that wall? And then what behind that? And behind, to me, it's just all about, do you want to save $1 or do you want to make 10?
Great way to think about it. Give me a daily habit that helps you stay focused on your goals.
Exercise and waking up early.
Give me your number one insight for investing passively.
Find people smarter than yourself, like you.
I love it. Love it. Great tip there. All right, we're going to go in a different area here. You are out there in California. Give us your favorite, or you're not in California still, are you?
No, I'm in Oregon now. I was
Oregon.
in
That's right.
Yeah.
All right. I was like, wait a minute, that's not what you said.
Yeah.
Give us your favorite place to grab a bite to eat.
Ooh. I'm a foodie. We have a really good Thai joint in town that just has so much flavor. Like, I'm not a huge Thai food. Like, I would never go, like, hey, if I'm come see you, John, I'd never be like, let's go get Thai food. Like, but this place here in town, it's called Sabai. Just has so much flavor, whether it's actually the Thai food or their entrees that aren't really Thai, whatever. It's just, it's really good.
Sounds like a great option. Mike, I really enjoyed our conversation. Listening to you talk about the busy schedule you had, managing your challenging career, wanting to invest, but wanting to make sure it was passive, starting with that turnkey $70,000 fixer-upper to scaling that and rolling those funds over into bigger assets, bigger deals, and then sharing what you're doing now in the vending space and just the technology and the advancements that are taking place, doing a little bit more of that kind of grab and go approach, where now it's about not just the physical vending machine, but almost creating this store where people can go in and swipe their credit card and buy these higher ticket price items. And just recognizing that if you want to do this, you can certainly buy a vending machine or you can buy a route and you can play the game at a larger scale. But the emphasis on staying passive so that you can take your time and spend that time doing the things you love with the people you love, as opposed to exchanging dollars for hours. So love that mentality. I think it's really, really important for us and all of our listeners to just keep that in mind. Most of us who are interested in real estate, investing in real estate, it's not that we love the brick and mortar aspect of real estate. We love what it provides for us, right? Cash flow, flexibility, passive income. Let's make sure we're not losing sight on those things. Again, if you want to learn more, you can check out Mike at vendingpreneur.com, as well as on YouTube under Mr. Passive _. Mike, thanks again for being a great guest and coming on Multifamily Insights. We look forward to staying in touch with you and hope you have a great day.